Good morning. You absolute dimwits often forget that I am the CEO of SPY. Higher for longer did not refer to federal funds rates. It was referring to SPY in your retirement account, because we all know Social Security is fucked in a few years. BT dubs, thanks for passively buying stock every 2 weeks in your 401k. Tomorrow afternoon, I'm going to come out and be hawkish, but you idiots are going to buy the dip and slam 0 DTE calls when my presser begins. Personally, I've been rotating my money into buying more gold calls. You know what's really funny though? All the doomer bears on Twitter and Reddit. They've been calling for a crash when I've delivered them a soft landing. People like RJR, Capital, Wifey, Alpha, and Michael Gade are terrible investors and have been wrong since October of last year. Yet you idiots give them $30 a month for shitty information that is half-baked and misconstrued. If only you had put those $30 a month in Nvidia since October, you would have easily doubled it. I know some of you will buy puts after watching this video. Some will grab their cocks and buy stocks. But remember, fuck your puts, fuck your calls. Jay Powell has you by the balls. And God bless my money printer.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks climbed on Wednesday with the benchmark S&P 500 and tech-heavy Nasdaq notching back-to-back record highs as investors bet unanimously on a Federal Reserve rate cut at its next meeting following the latest inflation data. And today, guys, we saw a real market rotation from the mega caps, from the large caps into the broad market. For example, Walmart, Costco, the leaders here in the defensive space, saw a rotation into pretty much everything else. Look at Google and Meta. Look at Nvidia, AVGO. Look at Microsoft, right? These mega cap names all saw red day, net selling, and rotation into pretty much everything else, into the broader semiconductor space, the smaller software names, into the discretionary space, the broader space right here, into industrials, real estate, utilities, energy, healthcare, even financials. The smaller names caught a bid with the bigger names taking it on the chin, like JP Morgan, Visa, Citigroup. It was truly a rotation year today. However, the mega caps did perform at least on an index basis thanks to Amazon and Apple. These two were up 1.6% and they held it together for the S&P 500, which actually gained 0.34% today, and every single sector was in the green. Amazon and Apple held it up for the large caps, but that broad market rotation meant every sector gained, and it was a very, very good day across the board. You could see here that technology XLK underperformed along with utilities and staples. So technology and defensive sectors were the worst performers here today, but everything else performed really, really well, including small caps. Look at the RTY, the Russell 2000, the best performing at an index level, up 2%. And it really was a day for mid caps and small caps, particularly value and core. We do know for a fact that the growth side of small caps and mid caps have outperformed the value and core components of the market. And while they were green today, don't get me wrong, we really saw this broad market rotation into the smaller size, into value, into core, and out of large cap, which was down 0.55%. But again, after all of the red selling we saw in the market, it wasn't a disastrous day for large caps. It's just a bit of a breather, a bit of a rotation. And to be honest, this is what bull markets are built on. It's built on market breadth and a broad, and this broadening is all stemming off rate cut expectations. Treasury Secretary Scott Bessent calls for a half-point interest rate cut at the next Fed meeting. The market is pricing in probabilities in excess of 80% of at least a 25% rate cut, and this was all on the back of the cooler than expected inflation data we got in the last couple of days. And the reason why the market is actually seeing this broad market rotation and rallying is because when we get rate cuts, guys, as you can see right here, and we get no recession, aka a soft landing, stocks tend to do very, very well 1 year later. You could see gains in excess of 20%. However, when we do get a recession, you can actually see a pretty ugly decline 1 year later. But the truth of the matter is, all of the macro data is telling us that we're not going to get a recession, and this is what the market is pricing in right now. However, in other news that did move the market and why we did see some churn in some of the semi names, especially the big ones like Nvidia and AVGO, China came out and warned Chinese tech firms over the Nvidia H20 and their purchases, saying that the US government or Nvidia may actually have a backdoor to spy on Chinese firms. Nvidia came out and rebuked this, and this is why we did see a little bit of churn in some of the bigger AI plays today. Also, CoreWeave dropped their earnings yesterday. The stock was down 20%. I still think this is an opportunity to buy the dip, in my opinion, because revenue grew 206%. Revenue backlog increased to 30 billion. The company said in the next 36 to 48 months, they will recognize about 80% of their $30 billion revenue backlog. So revenue came in at 2 billion for the trailing 12 months. And in the next 4 years, they're looking at that being 30 billion. That is insane growth. However, the reason why the stock was down 20% had to do with some margin issues. And I think the market wanted the backlog to increase a little bit more, maybe to 31 or 32 billion. But CoreWeave ended the quarter with 470 megawatts of active power. They're going to have 900 megawatts by the end of the year. They currently have 2.2 gigawatts contracted. CoreWeave also raised their full year guidance to 5.2 billion at the midpoint, compared to 4.9 billion in the previous quarter. That was a guidance raise, but they kept their capex and operating expenditures left unchanged. So you should see the margins improve in the back half of the year, but the market would rather sell first and investigate later. Also, the company IPO'd in March. The IPO lock-up period ends tomorrow. So you're going to see a lot of insider selling come to the market just to take advantage of how well the stock has rallied. That being said, I think if we get, in the low 100s, potentially even into the 90 region, I think this is a buy looking long term. I think growing revenue from 20 to 30 billion is massive, massive growth, but I'm rambling on. If you want the full unfettered details of CoreWeave, go to the second channel right here, guys. I have a full video on CoreWeave. We also did one on Circle, the Trade Desk, Uber. So we have a ton of videos and earnings updates. So go ahead, check those out, like and subscribe. It really, really helps me out. Now, in other market movers here today, Paramount Skydance, ticker symbol PSKY, was up at one point as much as 60%, but 36% for the day after it reached a 7-year deal for all UFC events, paying $7.7 billion. The market cap for this company is just $9 billion. This is a huge, huge deal. And a lot of people are going to go to Paramount to now watch the UFC. This is a big, big deal for Paramount Skydance right here. And then we also had a massive IPO today. Ticker symbol bullish, BLSH, was up 83% today. This is an institutional grade crypto platform with extremely tight spreads, and they provide their own market liquidity and market making services for institutional clients to keep those spreads tight. Great business, up 83%. The IPO environment is really good. In the after hours, the stock is up 11%. Very, very solid stuff right here. I think this might be a $100 stock over the next couple of days, and then we'll see where it settles off. But, at the right price, I would actually add this to my portfolio. And then for everything we saw today here, guys, it was 4,600 advances, 1,700 decliners. We saw net outflows in the Nasdaq 100 and the New York Stock Exchange, but inflows, if we actually measure the gap up, this, guys, is intraday activity. The S&P 500 up 0.32% today, and market momentum continues to remain firm. Look at this right here, the 5-day moving average, 81%. Very, very solid stuff. This is what bull markets are made of, and we're hitting all-time highs with market momentum and market breadth broadening. Very, very solid stuff. That's up on the charts. Now, another bullish day brought to you by rate cuts here in the S&P 500. The Nasdaq 100 was actually flat today. Green day through and through, but the real outperformers were the equal weighted S&P 500, the Russell 2000, the mid caps, profitable small caps. Very, very solid day. And it has been an exceptional time for small caps and the broader market. And that's a good thing. To see the broadening happening is a really, really good thing. However, when you look at the nominal S&P 500, it hasn't really done much of anything this week, but we've seen stark outperformance in the broad market. That's really, really good. And you can see it right here. SPYV, the value ETF, has outperformed SPYG, the growth ETF, by a wide margin. That is extreme alpha right there. Futures looking a little bit green. They just opened. European stocks were up. Middle Eastern stocks were up. Chinese stocks were up. So we're seeing the broadening happening internationally as well. And again, this is really, really good. And this is what you see in bull markets. You see this broadening, this rotation, and it's very, very healthy. It doesn't mean it doesn't mean tech stocks are going to fall apart. It doesn't mean the Nasdaq 100 is going to fall apart. It just means, small caps are about to win. It's their turn at the moment. And we're also seeing that broadening happening out with stuff like Bitcoin and Ethereum, right? Ethereum up another 3.68% today, and Ethereum has been absolutely ripping, nearing its all-time highs. I think we're going to go for all-time highs. We're going to go ahead and take the 5,000 level in Ethereum, but Bitcoin, no slouch either, up 2.75%. And I think you should own both of these in your portfolio. Make it a 5% allocation. If you really are risk averse, you can make it 2%. But if you want risk on, make it as much as 10%. But I think anywhere from 2 to 10% is a great allocation in your portfolio for cryptocurrency. Looking at volatility, the VIX was down ever so slightly. Yields actually fell. And again, the market pricing in lower rate expectations in September. And guys, normally when we get one rate cut, normally when we get one rate cut, that's often the start of a cutting cycle. And in that time period, we normally see at minimum 75 basis points worth of rate cuts. And at maximum, up to 400, potentially even 500 basis points worth of rate cuts. So the market's saying, hey, if we get one rate cut, more is to come. The dollar fell ever so slightly. And again, that just has to do with that macro trade, along with tariffs and some of the other stuff that's going on in the market right now. But the dollar weakening just a little bit. Bonds up 0.83%, and you should see TLT continue to outperform, especially if yields continue to fall. And then gold, let's see what gold daily chart right here. So gold was up 0.26% today. Silver was up 1.68%. These are the futures contracts right here. And then WTI, very, very volatile, but it was down 0.67%. But let's actually go ahead and talk about the S&P 500. So yesterday, we saw the call wall move up here on the daily chart for the S&P 500. And guys, if you think we're getting a little bit frothy, we are here in the oversold territory with regards to the RSI. But again, we're not quite at the 80 mark, and we normally do push well into this zone before we actually get overbought. So if you think that this can continue to move higher, it definitely can. But we are starting to see parts of froth. This was a great buy right here at the 50, but things are looking a little extended at the moment. But that doesn't mean it can't get more extended. And generally speaking, right, if we get into like this overbought territory and we stay there, at least in the short term, that definitely means higher prices, because it means, there's momentum and euphoria at the very minimum. But we've finally broken the trend. You can see we had red day, green day, red day, green day, red day, green day, red day, green day. Now another green day after a gap up in the S&P 500. Now we are approaching the call wall right here, so we can actually see a little bit of resistance into the end of the week. However, there's definitely strength in this market, and I would definitely not be looking at shorts at all. The only thing you should be doing right now is looking at dips to buy. Very similar situation at the Nasdaq 100. We're approaching the call wall, and this is where we can see a bit of weakness, but there's a bit of a gap here, so we can actually see a little bit of a rally, and it's not super overextended, but it, markets, especially the Nasdaq 100, is getting a little bit frothy. Let's quickly close this down and look at the RTY. Very, very interesting trade. Look at this. This is a very bullish candle, a gap up and go, another gap up and go, and we're right at the top of the call wall right here. Normally when you see a close above the call wall, right, you see the call wall move up the next day, and this is actually a very, very bullish indicator. I do think we probably go ahead and test these highs right here in small caps over the next couple of weeks. This is incredibly bullish stuff when you just look at the charts. Technicals look really, really good. And again, there's room for this to continue to go higher in the RSI. So small caps look poised to go higher. And especially right here, if we clear this key resistance zone, it's off to the races at these highs, very close to the 2400 area. And it's just all-time highs. Let's go ahead and have a look. So the 2400 area, yeah, it's pretty much all-time highs. If we take a measured move as to where we are and how long that's going to take, it's about 6% away from all-time highs. If we can go ahead and get that, Bob's your uncle, and then we're off to the races here for small caps, and then we're in price discovery mode. And that's just the thing. When you get to all-time highs, right, you're in price discovery mode. You don't know how high you can go. And generally, markets will climb the wall of worry and that price discovery much higher than many, many people think. Look at 2021. Look at bullish euphoric peaks, right? Things can go on a lot longer and a lot higher than you think. And if the Russell 2000 gets to like this area where we break above, we could even go to the 3000 level in a very short order, especially if this rally is supported by the fundamentals and rate cuts and credit creation and money supply, etc. Now, let's actually quickly go ahead and talk about Ethereum, guys. Absolutely crazy move right here. This is what we expected. We were very bullish on Ethereum at these lows right here. I said to buy at the break of this. And had you done that, if we take a measured move, you'd be up very close to 40% in very, very short order. But this is where we are right now. Let's quickly go to the weekly chart. You can see we've broken above these key resistance zones right here. And this massive, massive trend line. This is a breakout, a technical breakout, and we're going for these all-time highs. I think we might actually get it before the end of the week, if not sometime on the weekend. Crypto trades 24/7. Don't forget that, guys. But yeah, very, very solid stuff. We're going for these all-time highs, and then we're in that price discovery mode where we can just continue to move higher. I think even if we do get dips, right, even if we do get pullbacks here in Ethereum, and it is going to pull back eventually, I think ultimately we have a strong support zone right here, and that will just mean we put in a higher low, and that would mean trend continuation for Ethereum. Tom Lee has an end of year Ethereum price target of 7,500. Cantor Fitzgerald came out and said they're looking at about an 8,000 end of year price target. I've seen a couple of 10,000 out there, but I wouldn't be surprised to actually see Ethereum double before the end of the year. So guys, if you think you're late on this rally, buy dips or just enter right now and sit through the volatility. Make it a small allocation so it doesn't impact your portfolio significantly. But I do think Ethereum is going to continue to go higher. At the very minimum, we're going to see those all-time highs and then price discovery. Now, Bitcoin, let's look at Bitcoin. We just had a closing all-time high year for Bitcoin. Very, very solid stuff. Let's layer on M2 money supply to see where we are. Now, guys, when you layer global M2 money supply over Bitcoin and you offset it between 80 to 100 days, whichever suits, and you can go ahead and get this indicator on TradingView for free, guys. When you go ahead and do that, you sort of get the path for Bitcoin. And right now, the market is telling us that Bitcoin definitely still has higher to go. We could see the 140,000 level. However, we are expecting a little bit of volatility when we do get to this area right here. You can see M2 money supply is foundering. And that's very simple. It has to do with the Treasury General account. They're refilling the Treasury General account that pulls away liquidity from the market, right? And that is why we're seeing this massive move right here. And I do think this is actually going to continue. We may touch these highs, but I think we're going to see a little bit of volatility in this August-October area. However, Bitcoin will continue to rally, and as a result, Ethereum will continue to rally. It is Ethereum and Bitcoin season right now, and you can see that we still have quite a while to go. So to actually get to the top end of the range, if we take a measured move, we can see that to the very top, it's still about a 15% run from here. So we've been long Bitcoin since about the 70,000 mark right here. I was pounding the table to buy Bitcoin right here, and I was pounding the table to buy Bitcoin right here. And had you done that, you'd be up in a very significant way, and we are going higher. I will tell you guys when to trim Bitcoin. It is not now. We are in a position where you just want to hold Bitcoin and go from there. And then, guys, looking at individual stocks that I really, really do like. One of the names I gave you a while ago was EVVTY. I said you want to buy this dip on the back of its earnings. We were getting long EVVTY at these lows right here after their disaster Q1 earnings, where we saw a terrible drop, where we saw a massive drop. We then bought right here. Now the stock fell 8% after some legal issues the company's dealing with. I think it's going to go lower to the $79 area. If we get to this area right here, this is an opportunity to buy the dip because the stock already trades at 10 times earnings. It pays a great dividend. It's buying back a ton of shares. The fundamentals have not changed. It's just some of the legal issues that could precede this. But this company is a gambling company that deals with legal issues all the time. I do think this will be much higher at the end of the year. So if we get to this $80 region, $78 region, go ahead, buy the dip in EVVTY. And by buying this, you're also diversifying away from a US stock. This is a European stock. Guys, and diving into sentiment, the fear and greed index is back in the greed zone. And guys, even though this is in greed, things aren't euphoric just yet. In fact, with equity markets where they are, and sentiment here in the greed zone, it simply reflects improving risk appetite supported by resilient fundamentals. True euphoria usually comes when sentiment detaches from reality, not when it's underpinned by solid market breadth and momentum like we're seeing right now. And talking about the fundamentals, they look extremely solid. When you look at the forward 12-month, 24-month, and 36-month EPS projections here for the S&P 500, they are all at all-time highs, essentially pointing to the fact that the market can continue to move higher and can continue to drift higher, especially as we continue into 2025, into 2026. And I think the macro backdrop is also a lot more solid than many people are giving the market credit for. The Fed's Q3 GDP Now estimate is at about 2.5%. That's very, very solid. And when we look at inflation, CPI came in yesterday at 2.7%, beating the expectation of about 2.8%. So we came in very, very cool. And the funniest thing about yesterday's CPI is that literally everything that's driving inflation higher is not subject to tariffs. Shelter, medical services, electricity, restaurant meals, airfares, and used cars, those are driving the CPI higher, but they are not subject to tariffs. Meanwhile, apparel, news, cars, and stuff is low or actually deflating, as you can see right here, guys. So for all intents and purposes, as it is right now, tariffs is not driving inflation. And if that is the case, as the year goes on, we are going to continue to see a deflationary or potentially disinflationary environment. And that's going to be supportive for the Fed to cut much more than the market is anticipating right now. And right now, the market is anticipating a cut in September, a 25 basis point cut to get the current Fed funds rate to 400 to 425 basis points. This now sits at a 94.4% probability. And guys, we are cutting into, like I said, a resilient economy. When you actually look at the change in seated diners by month, things are looking good. Globally, you see 15% growth on a year-over-year basis for this month, 12% the month prior, 11, 10, 11, double digits pretty much for most of this year so far. When you look at the United States, very similar situation. It's true for the United Kingdom, Mexico, Ireland, Germany, Canada, Australia. Through and through, the consumer looking very, very healthy. Now, tomorrow we get more inflation data. We get PPI. This is inflation that producers pay. We're looking for a 0.2 figure right there. If this comes in cool, that's just going to be more fuel for the market to rally. And then on Friday, we get retail sales. And we're pretty much done the big name earnings for the week. Tomorrow, we do get Nubank and Applied Materials. That's about it. John Deere and JD are before the open, but the big names like CoreWeave and Circle Internet Group have reported, and they are officially behind us. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.